Good morning, everyone. We'll probably have a light session today as far as people in the room, but we will record it. Thanks for being here. Happy Thanksgiving. Hopefully you had a good time with the families. All right, so I'm going to start, I'm going to break it up into 3 videos and about 30 each. So we have between 90 and 100. Sometimes we get a couple extra in here. So they are alphabetically set inside the videos for ease of navigation. We also have a volunteer that, without asking, breaks it up with a spreadsheet. So look in the notes. Within a few hours, he usually puts in. Thanks, Ray. He puts in an index in the notes section. Also, the notes section is open for commentary and follow-up questions. So give it a like if you like those videos, because we do release them for public late, so you get the jump start, and that would help us ranking in there. So let's go. Apple. We'll go with Apple. First of all, usually I start with the SPX, and this time it's very simple, and the SPY. Okay, the bulls are completely in charge, and the bears are. They have their backs against the wall. I don't even need lines to tell you that we are at the upper ends of the range. So a couple things can happen. The bears a headline could break out and break the momentum, because without that, nothing's happening on its own for the bears. Or break away from these September fails. July fails. We confirm the September breakout, which we just broke out, and we break out of the September fails. Gotcha. One moment. Okay. So you haven't missed anything. The markets are breaking out. Now, that's not the same for the small caps. This is the dilemma I'm having. I need the small caps to have an unbelievable week in order to believe that these guys, the big guys, can actually break out again. Okay, so we're leaving a lot of weak spots on the chart. So maybe we have a little hiccup in the headlines and we drop, establish footing, give some time for the IWM to catch up. This information will be in more detail later tonight. If you were to not miss a video, don't miss the one tonight. Usually Sunday nights I release a 6-minute video, which is the strategy video. Back to Apple. Apple is representative of the market at any point in time. It has made progress, but it's going into prior fails. So if you look back at early August, it failed miserably here. So here it is back at it. Okay, what happens here? Dips into 185, 184. That yellow box or on top of it would be opportunities to hold and come back and take these out to get enough oomph to punch through all of these. It looks very easy on that other chart on the SPY. I promise you, it shouldn't be easy, but it's right there, so it's available. ABBV, this is a somewhat slow poke chart, and it's going into a spot where they have been selling it. Look, rally was sold, kind of a rally sideways was sold, another one, and here's another one. So is this a real bottom as opposed to better than this one, better than that one? We shall see. They have the opportunity. They have buyers everywhere into 136. If you lose 136, I think you end up at the 130 level inside this green box. Maybe better support at 134. So if somebody just got started long for the long term as a swing trade opportunity, it's not bad. Just make sure you don't write it down another $10 or $8. If I'm long, I'm not adding, by the way. Adobe, it's too high for me. Great trend. It exceeded our target. We have lines, and it went above the lines. You would never catch me going long a stock that is at or above my targets, especially when it's doing this into these massive fails from November 2021. Whoa, okay, so that was the top of the pandemic exuberance. So this here is definitely not an obvious entry point, although the bulls broke out above 560. So dips into 560 now are opportunities to get engaged for an active trader. If I'm an investor, I leave it alone. Good P&L, good momentum, good stock price. I don't want to add to longs if I'm feeling like, oh my gosh, I'm gonna miss it. Well, you already missed it, so where's the fire? AEHR, very small company. Look at the sales, but technically pretty intriguing. If it's a good investment as far as a company, do your homework on the viability of the company. This here is an opportunity to get long because, unlike Adobe, this one is at targets that are bearish, that we thought it could happen, and it did happen. So it may not be an absolute bottom, but I could sell a put or a credit put spread down below to buy shares, or I can buy shares and hold on to them. Either way, I wouldn't do all in. Like if I wanted to buy 100 shares, I would buy like 40 and wait. If it goes to 16, maybe I'll add another 40. So then I'll be in at a price of like 19. So that's the strategy. If I'm an investor, it's not a bad deal. If I'm a swing trade opportunist, I could do something with it. AIG, definitely not for me up here. Technically, it's in the hands of the bulls. They have exceeded some important levels, but barely. So let's see if they can confirm how. If it drops to 62 and comes back and gets back to 66 or 7 or 8, that would be confirmation. Now, don't be shorted because above here, it can go to 78. But this is where I don't know if I trust it. Look at this. I mean, 2022, a couple of fails up here. I don't know if it, oh, okay. And the 2017, 18. So pretty tough zone to say, okay, this is a good starting point. Hi, Dave. Okay, so ALB, decent place to be long as a swing trade opportunity, with the concern that it could still not be done. So it's pretty close to my levels. That orange level came to fruition, and then I added this red forecast, which is nothing but a copy of this one, because that's what's happening. Look, so I just copied, and this is kind of a target of losing the levels higher. So it's a decent starting point. I wouldn't go all in just because I just don't know the company very well, and the P&L is deteriorating fast as far as earnings. So just in case, I don't want to add to longs. If I'm looking to go long as a strategy from point A to point B, okay. If I'm looking to invest for the long term, I would take a partial entry. We don't know where it wants to go, right? So you have to be careful. 135 would be good news. 137 would be even better news. If it gets to 148, you can breathe a sigh of relief that maybe you do have an ascending channel, that they're done falling. You could not convince me to go long this stock right here, right now. First of all, NVIDIA is eating its lunch with regards to the public opinion, right? It's NVIDIA this, NVIDIA that. And I'm not sure they still have a technical advantage. So NVIDIA now is almost the size of Intel in sales, and this one stayed behind. Technically, the chart is at a place where it would be an exit point for me, not a starting point. The breakout was from 111. This is the target zone. Look left, you'll see an orange arrow up here. So this area would not be an obvious point of entry. And if I'm long, I would trim and flip into something else. Amazon, I discussed it with family and friends who know investing, and consensus is that this company is on rails. I have to tell you, I drove this weekend, and maybe, I know this is not a scientific number, 70% of all semis on the street are from Amazon. No joke. I mean, the traffic was unbelievable. We were going 80 miles an hour or 85, everybody. And there was more trucks than cars. Where is the recession that they're talking about? I just don't see it. Commerce is flowing like you wouldn't believe. Small companies, large companies, but Amazon is definitely a dominant beast. This here is an exit for me if I was long for a potential trade. It's at a place where it's failed before, which is also the breakout. But I would rather be buying dips if I'm not long already. So I'm not sure what you're asking me here. When the stock hits a level that it's failed at before and now somebody is looking to go long, I question, you should flip your understanding of investing upside down. It's not an insult or This is constructive criticism. If somebody's asking when a stock goes into a prior fail, this is when, because everybody now feels better for some reason. We had nothing improve. We still have a combative Fed. We still have all the wars we had before. And we still have a political stalemate in the U.S. Everything is still there. But for some reason, now we feel better that we're late getting into stocks, and that's when everybody wants to get into stocks. Not for me. Buy the dip for sure. So Arista, we made money with it quite a bit, quite a few times, and this one is not for me up here. Catch the next dip. Look how quickly it pays. This price action has been very repetitive to the point where I copy and paste, and then the price action happens exactly. This yellow thing was there. You've seen it before. Buy the next dip into 205 or lower. That would be my behavior there. Same with this one. You kind of missed it, and luckily now we have a box to trade while it's up there. If you're an investor, I don't see a rush. If you're a trader, you've got a perfect box to trade. Inside this yellow box. Buy the dip into 900, give or take. And above the high that you just made, it's in breakout in open air, but goodness gracious, right? Let's see if we look left. Do we see anything? I don't think so. Anyway, nothing recent at least. This is a breakout that could have more upside, but I would be buyer of dips or an active trader. As an investor, again, you missed the easy marks, so where's the fire? I'm not familiar with this company. Okay, so you're right in the middle. You have a seller up here and multiple buyer levels below. You have buyers at 46, 45, and anything below 44. I'm not sure what to say. I wouldn't buy a call. If you're an investor for the long term, it doesn't seem crazy to start here. And there's no action other than just it's stuck in the middle of a pretty wide range. You have sellers above. Baxter International. Not for me, and I'll tell you why. They lost footing at 38, right there where my cursor is. And the target was down here, and they tried to save it, and they ended up at the target anyway. But 38 seems like a death zone. If you were stuck long and this rally got you money back, I would consider getting out if you're a trader. If you're an investor, this whole thing was an opportunity to invest. So if it dips back into 34.50 or 34, re-engage long if you're an investor. BITO doing exactly what I thought it would do. I've covered it tick for tick in the live and outside the live. I'm still long BITO. I will lighten up when Bitcoin gets to 42, 44. That's because I am invested in crypto as well. So I have to take some profits because my plan has unfolded to a T from 2021. October or November, I shared a video with the members back then saying how crypto can come down from 60 whatever to 22 or 19, and it did, and we loaded up at the lows. I'm still engaged. I will wait probably for the dividend in a few weeks and decide whether I want to lighten up a little bit and wait for the next crash and do the same thing all over again. The entry point for us now after the dividend is under 9 and under 8 for some people. The official entry point was at 11.50 and 13.50 multiple times. Winner, good trend. They're buying dips inside of an ascending channel on a long-term basis. So they've been dip, bought, dip, they're being bought. Let's see where they get to. And if they dip again and get to 22 or 24. So when Bitcoin hits 42, 44, consider me out of some of the BITO. It's not technically exactly the price of Bitcoin, but it moves with it. Okay, so Blackstone, not for me up here. This is an exit point for Blackstone, not an entry point. It kind of did what we expected it to do. It has a lot of support below. So next time it falls into 101 to 99, consider engaging long if you like the company. Caterpillar, I sold the credit put spread in it. and for us, and it played out well. I think 258 is going to be a problem. 260 is going to be a problem. This August pivot is going to be a problem, and it's a zone. So if you take out 255, which is the most recent fail, maybe you get to 265. But I think those are exit. I want to see how well they defend the 235 area under duress one more time. So for now, you do have buyers below 238. So if it falls into 238 or lower, last time they got there recently, they bought it. So maybe I would sell another credit put spread. For now, I don't have a reason to invest in Caterpillar, because if they tell me the world is crap, why would I want to invest in an industrial? But this is a quality company, and it has multiple industries, clearly, that can feed it. And they're buying dips. So let's see if they can get back up here and make a higher high. This was a dip, so we were kind of here right now. Maybe it does that. This was a dip, and we would be kind of here right now. Maybe it does that. Higher high. So respect it. Definitely don't short it for no reason. Not an obvious entry point. 15 is a catalyst. If they take out 15, they can get to 16, 16.4. Maybe even higher. But look left. Oof. Huge sellers here. 15 is going to be difficult. Maybe you can convince me to buy the dip into 1350 or 13 to ramp up to attack 15. Okay, it has earnings coming up in about 24 days. Technically, I think it's easy for it to get to 13.4. So you might have some short-term difficulties. Clorox. For the life of me, I don't know why these company stocks are so active. It's crazy. Okay, not an entry point. So here's what I see. Huge consolidation zone. Consolidation meaning going sideways, bulls, bears, fighting it out. Nobody wins. Nobody has control. They're rallying, they're falling, they're rallying, they're falling around a horizontal line. Bulls make headway. They level up, and then they let it go so quickly, and they get below it, and now they're trying to get back into it. Not a starting point for me. Too much uncertainty by the bulls. They can go, and I don't want any part of that. If I'm an investor and I just got my money back, I would be out. Comcast. Okay, so yes, nice bounce, hard bounce, good buyers below 41. So that's what that says. But look at all those sellers. I mean, what am I going to do from here? We have lower high, higher lows coming to blow. I think you can get down to 42 or 41.50 one more time and then see what they do. And maybe they can crawl back to 45 over the next 3 months. Maybe sold puts, credit put spread, something like that. Buying calls, I'm not sure why. Campbell Soup. All right, so they took half this opportunity and decided they want nothing of it, and they're taking, they're trying to come back, and they have sellers hiding at 42-ish, and then more sellers at 44, and more at 46 to 47. So the bulls have their work cut out for them, and unfortunately, this one does better on falling markets. So we'll see. This dip resulted in buying the dip. This another dip. It's lasting longer. The bulls have not been able to level up their game here. Let's see here. Okay, so this red path is the one that happened before. So I laid it here. Maybe that would be a recovery of sorts. So if I'm an investor with shares or long dated calls, maybe I'll see what happens over the long term. So this is a slow poke trade maybe. CRM. Earnings are coming this week. I'm not sure I can tell you anything right now. Without the earnings, I think it's easier for it to get to 212 than 240. But it will follow the market. Maybe it'll set the market pace. This box we've been dragging Luis, one of the members. Hey, Luis. Months ago, I can't even remember when, he came up and did a couple of iron condors, and we're shuffling the box over and over. So it's stuck in a wide range. Just trade the range. Up here, it's not an entry point. Up in the 230s, in the 190s, 195s, it's not an exit point. So range trade it. I don't have a reason to buy shares here unless I'm a super long-term investor. Buy the next crash. It's a good company. These guys report earnings this week as well. If you're the same person giving me both, then come into the live room the day of the earnings. I'll give you information you could use. Right now, I can't give you anything you can use because it's too early to guess on the earnings. With this one, you can follow my path, I guess. This is a prior path that has happened many times before. So we've been super right about the arrows. Every dip we bought in this one made us money like right away. And I can't wait for the next dip so we can jump on board and make money right away. For here, I wouldn't do anything until the earnings day, and then after the earnings, react to it. CSCO, if you bought shares on this dip, okay, I get it. Nothing exciting, though. It's a beast. Financially, it's a stable company. Look at the P&L down below on the right. There's nothing to complain about, but for some reason, oh my God, it sucks, sell on the earnings. It's all about expectations. So we can take that out. Now it's back into a better set of hands. So the buyers down here have more conviction than the one up there. I'm not sure I want to buy calls in this company. I think I sent out a sell puts or buy shares if you're an investor for the long term or something like that. But if you bought calls, manage them tightly. Don't let them die. So if you buy leaps, okay, I get it. So it's kind of like buying shares, but don't let them. Leaps are not magical. You still have to manage those. CVS, very violent stock. A bunch of people got stuck in it months and months ago, and they can't get out. So a lot of sellers in 272. So they would need a game-changing headline like, oh, look at what we fixed about our business. Yeah, you can get to 72 again. And then you're going to hit all of these sellers. So if you get it from here to 72, I would exit if you just got long. If you sold puts or put spread, okay, I get it. But I just don't see why I need to get into it now. Okay, but it is available. A rally to 72 is available. Caesars, make sure you have your handle on the headlines. Okay, so I traded one company for us, LVS, and it was by request from someone, and I regretted it immediately because you got labor issues, you've got hack issues, you've got retail issues, anything, virus, if they break out, virus issues, anything. So it's kind of a bad area to be invested in. Nevertheless, above 47, it might get to 50 or 51. Why? Because it's kind of an inverse head and shoulders that has like a 54 target. But I think there are a lot of sellers at 50 to 51 if you look left. You see that box that says buyers? Well, they failed. So now we can do this and say sellers, resistance. But it is technically feasible to get to here if they can take out last week's highs with force, because you do have sellers just above that, but I think they can do it. Disney, okay, so I should go read the comments. This here, folks, is not an obvious entry point if you're a trader. You just got into a level that was death not too long ago. Even though it can get to 102, I think you're coming in late. Buy the dip if that's your goal. If you're a momentum buyer and you know what you're doing, then you don't need my blessing. Buy the dip. Don't short it because it's gone so far, and don't short it because you see something on Instagram that tells you it's been hated on. Look at the P&L. Okay, this company is on rails as far as assets, so they can do whatever they want. Honestly. Too late to get long for me. Buy the dip into 91, 92, you'd be better off. Okay, so somebody is trading the Dow. Technically, the Dow broke out from 34.2, headed into a prior fail. So this is where the urge is to fade it for a dip. So cover the gaps like the markets. But if by Monday, by tomorrow morning, there's no headline coming out, the momentum is still with the bulls, and how much work will it take to bust out of here? If you're shorting the Dow, your best bet is UNH fall because it counts 3 times as much as Apple. So you should be glued to that company's headlines as well. Oil also affects it well, and banking. So because of JP Morgan. So make sure you are in tune with all the other big stock, like a company that has a high dollar stock, like a $300 stock, because Apple doesn't count as much as a company that has a $400 stock in there. You see where I'm going with that? Okay. Trading wise, I would be buying the dips anywhere below 34.6. Devon, sellers above, buyers below. The buyers look stronger than the sellers, to be honest. But that doesn't mean they can break out from 46.50. That's your problem, 46.50. Take 46.50 out, maybe you get to 48. Repeat the same comment. So what do you want? You want them to come up here, fail, bust out, fail, establish footing at 46, come back to take out 48 in order to have a chance at this. So I'm basically saying they need to repeat this one down here, like this. Wow, it's exactly like that. So instead of doing it and cheating, saying that I did it right the first time, I don't do that. I'm just going to copy it over here, save us time. But this is a flat one, in my opinion. Something like that. Okay, so keep on with the no lower lows. Take out prior fails to get some decency up there. These are trading comments, not investing comments. Investing is on you. You should research your company. I don't know what that is. Wow, 30 billion. Okay, so what is this? Okay, so this is not a starting point. Just look at how many times it's failed here. This is the opportunity point, but it hasn't taken that opportunity yet. And then you have more sellers at 496. So this is not a starting point. If this is where you want to get long because now you feel better about it because it's no longer at 432, you are the person I'm asking to flip your investment instinct upside down. When you're scared poopless about it, this is when you consider reasons to get long. Down here. For the same reason they didn't lose the floor, they probably won't break out easily. But if they do, it's gone. So this is not a starting point for me. End phase. I couldn't understand your comments. Are you shorting it or swing trading it? You said you enjoy shorting or something like that. One of you did that. I wouldn't short it. It's got good fundamentals. It is shortable because it loves to fall, but you know, you can short it into 112. It has a lot of sellers up there, but I don't know how you short. So make sure you know what you're doing. There's no obvious reason to go bet against the price action. If the markets rally and there's no specific solar company reporting, this might get to 116. But it is susceptible to dips, so be careful. I'm not sure what you're doing. This downside arrow was my estimate of a target if they lost this up there, but it's by no means surgical. So yeah, it could curl back down and finish my white arrow. So the opportunity is there. I just want to make sure that you know what you're doing. Energy transfer part. I just don't like this whole industry. I don't know why. I'm like averse to it. 14.2, this recent fail, is the catalyst to get you to another dollar. And you do have buyers below, so it's a legit expectations. But I think it's just as easy to fall to 13. And if you get there, then what? You look at all these pretty strong, staunch zones from prior. So you have a nice trend going. Don't fight the trend. And you have an opportunity to get to 15 or 15.2. Yep. I don't doubt that. So just make sure, are you trading or investing? Because the trades that we're into resistance here. All right, video 1 is done. Let's stop it.